Guys, in this video, I'm going to tell you exactly how did I score a 2,500 profit return on investment in this AI stock. And now let me just tell you up front what AI stock am I talking about. I'm talking about Palantir. But to score a 2,500% profit, I had to really buy the dip, and now I'm up over 2,500%. How did I do this? I'm going to spill all the beans, and I'm going to explain exactly my tech deep value investment strategy so that you can replicate these over the next few years. If you follow this strategy is followed by top investors, including myself, and I share everything also in my Henrique Wealth Academy. But you don't need to join the academy now. Don't buy nothing. Don't do anything. Just watch the video until the end, because I'm going to give you a lot of free information, useful information on this video. How can you find these very, very good stocks that can return 500, 1,000% or more, even 2,500% like Palantir returned to me. But you know, a year ago, I wrote an article saying that how did I get my 1,000% Palantir home run? And back then, I had sold part of my Palantir position, and I left the rest, and I let it ride, and now it's over 2,500%. Just for reference, the S&P 500 took 38 years to return that same 2,500%. And I managed to do it in only like 3 years with Palantir. So how was this possible? Was this luck or skill? Well, I might say, oh, it was lucky. Henrique was just lucky, and he just invested right time. But no, this is not luck. I'm going to give you the framework, the blueprint that allowed me to make this investment. I have many other stocks in my investment portfolio. In fact, I have over 17 stocks that have returned over 100%. Okay, inside my portfolio. And this is not luck, this is skill. I call it my tech deep value system, and I'm going to show you everything so that you can replicate this luck again and again and again. But the first thing is, of course, pick your underpriced fighters, your underpriced stocks. And how you do this? Well, first, don't follow random YouTubers talking about stocks, okay? I'm doing this YouTube video, but I want to invest in your education. I'm not telling you to buy a stock A or B or C. I want to give you the tools so that you can discover who are those stocks and what are those stocks, and you can buy them. And it's very important to do this. Okay, the first step, you need to pick your underpriced fighters. You need to pick underpriced stocks, and you should not just buy a stock just because you hear a random YouTuber on social media talking about that stock. You need to have deep thinking, deep research, and second level thinking. Let me just explain what second level thinking. First level thinking is like, oh, you look at the stock and think, oh, this company has a cool product and the sales is going up, the stock will go up. Well, maybe that information is already priced in. The second level thinking, you need to think what other people are thinking and think ahead of them, okay? You need to think what are people missing in the long term regarding this stock? What are people underestimating? And this is where the money is. You need to think 2 steps ahead. So when we look at Palantir, for example, in 2022, people were like super depressed. The stock was dipping 80%, going down. And I was like, not following the herd, right? You need to question the herd. You need to question the expert. You need to question everyone, including yourself, and ask second level thinking. The stock is going down so much, but what's behind this? What's behind the stock going down? Is it because of the stock sucks, because the company sucks, or is it because like the market is just panicking? And that was the case. So the Palantir misunderstanding was that the crowd saw a stock that was too expensive. It was just another data company. Palantir is a bubble, blah, blah, blah. Everyone talks about Palantir as a bubble, but the market doesn't care what people think. The market cares about fundamentals. And what I saw in 2022, I saw a company that is building the operating system for AI that is used by the CIA, by the FBI, by the military, by the hospitals, by tons of very critical infrastructure. I saw a massive moat via ontology. Basically, what Palantir does, one of their softwares, is just software to put all the data together. Imagine you have a big business, a big company with thousands or hundreds of thousands of clients. You have big supply chain. How do you put all these data together and make sense of the data? That's why Palantir is such a critical company nowadays, because Imagine military, police, big companies, big hospitals. You have hundreds or thousands of suppliers, hundreds or thousands of employees, hundreds or thousands of clients. How do you put all this data together and make sense of the data? Okay, so this is a very critical type of software embedded with AI. And once a customer gets into Palantir, it's very hard to change the software because you need to invest millions of dollars to make sense of this data. And Palantir is a sincerely very good investment, very good software for these companies, right? So once you understand the product and once you understand the second level thinking regarding the company, you need to look at the fundamentals. Let's look at the numbers, right? And what I saw in the numbers, well, I saw an income statement. You need to look at the income statement. You need to see the revenue, the income, their sales. You need to look at the balance sheet. But let me just jump here on Google Finance and show you what I'm talking about. You don't need to use very complex tools. You simply go and search for Palantir stock or whatever stock you are searching. Go to Google Finance, and then you will be able to find the income statement. You can see that every quarter the revenue is growing. Annually, the revenue is growing every single quarter now. In 2024, it was close to $3 billion, while in 2020 it was only $1 billion. So they triple their revenue, annual revenue. And for sure in 2025 will be even higher. You can see here the last 3 quarters of 2025. You can also see that income, their profits are growing every single year. So this is what I saw about the Palantir stock, right? You have a growing business. And then you look at the balance sheet where you have here their assets and liabilities. Liabilities is the debt of the company, and it seems it's pretty low compared to the assets. So it means that the company is in a good financial situation. We want to see a very solid growing company with low debt to assets ratio, cash rich, and this means that company has room to grow and is not going to bankrupt anytime soon. So this is great, right? And what was the disconnect? Well, is that between 2021 and January 2023, the stock price declined by 86%, okay? And what first level thinkers will think is like, you'll sell, panic sell, right? Second level thinkers will not sell, will be buying, because now the fundamentals are contradicting the price. The stock price was going down and going down and going down. Let me show you here. So in 2021, 2022, the stock price keeps going down and down and down and down. But the company is doing great. The sales are great. Everything is great about the company except the stock price. There was a big disconnect. So I keep buying. And in the meantime, the stock recovered, and at the moment is up 2,700% since the lowest in January 2023. Right, so if you saw this disconnect, right, now you'll be doing very well. You'll have kept buying the stock deep, and you'll be now doing very, very happy and very, very well. Now, the most important thing here is that never trade, only invest. If you were a trader, you would buy that stock, the stock would go up 20, 30, 40%, you would sell, and that's it. As an investor, you will buy and hold it for the long period, for the long term. And remember, 97% of all day traders lose money. Why would you want to be part of that group, right? On the other hand, if you are a long-term investor, most likely you will make money. My average holding period of stocks is 26 months, okay? Not 26 minutes, not 26 hours, not 26 days. It's 26 months, okay? So on average, I hold a stock for more than 2 years. The big gains are in the buy and hold, not in the trading. Forget the trading. Just find good quality stocks, find your underpriced fighters, and hold them for the long term. Hold them as long as the fundamentals are still there, as long as it's still a good company, okay? This is how I've been outperforming the S&P 500. These are my returns for 23, 24, and 2025. 59%, 36%, 25%, just investing with my tech deep value stock that I share in my Henrique Wealth Academy. I share all my stock picks. I share how do I pick the stocks. I share a lot of investor psychology, investor education, so that if you want to become a successful investor, not by luck, by skill, this is what I do in my Wealth Academy. Okay. Next step, once you find your underpriced fighter, you find your underpriced stocks and start building your portfolio. One of the secret sauces is buy more when others are panicking, okay? If a stock was good at $100 and you like it when it was $100, you should like it even more once it's $80. And if it drops to $70, you should like it even more, right? If you want to go and buy an iPhone, you'll be happy if your iPhone is selling at a 20% discount or 30% discount, right? And you should also be happy if your good fundamental stocks are selling at a discount, right? So this is what I did in 2022 when Palantir stock was dipping. I was just happy. I was hoarding more and more and more. Everyone was screaming selling, and I was buying and buying, right? But you don't keep buying the stock randomly every time it goes down. You should have a method. In my averaging down, my dollar cost averaging rule is every time a stock drops by 5%, I increase my position size by 5%. So let's say if I have invested in a stock $1,000 and it drops 5%, I will increase it by $50 more, 5% of $1,000. Okay, so this is how I do it. And every time it drops 5% more, I increase my position size by 5% more. Okay, if it drops by 10%, I increase my position by 10%, and so on. And if you do this, you are lowering your average buying price. You are buying the dip, and sooner or later, the market will catch up. The market will become rational. People will stop panicking. People will find that that stock actually has value, a lot of value, and then you are in, and you'll be one of those investors that will profit very handsomely from this. Of course, you need to be patient. Remember what Warren Buffett and Charlie Munger said: stock market is a machine that transfers money from the impatient to the patient. So you need to be patient, okay? Sometimes stocks take 1, 2, 3 years to recover. Palantir, it took me over 3 years of holding Palantir to have these very, very good returns. So you need to be patient. And of course, once your stock is performing very well, maybe it's time to take profit. Now, taking profits is important if the stock is already growing so much, already returned 300, 400, 500,000, 2,000%. It's time to take profits. It's time to take your money, some money out of the table, okay? So you see that the stock is absurdly high, very expensive compared to the sector. Maybe sell part of it, sell 1/3 of your position or half. Or the fundamentals are not there. There is some red flags. Palantir, if the CEO Alex Karp quits, maybe I'll sell the stock. Okay, because one of the reasons why I hold Palantir is because I like the CEO. I like the Alex Karp. I think he is crazy, and that's one of the reasons why I want to invest in Palantir. You can also sell eventually if in your technical analysis there are some overbought signals like RSI is over 80 for 3 consecutive weeks. Maybe that's a good time also to take some profits out of the table. But when you buy stock, you don't really need to have an exit strategy. Remember what Warren Buffett, if you're only thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. And he also said the best holding period is forever. So I only sell not when I don't have an exit strategy when I buy a stock. I sell it when it's either extremely expensive or the reasons why I bought the stock are no longer there, or it's like super, super overbought. It had a crazy run and it's time to take some profits out of the table. So yes, I'm going to continue holding Palantir. I sold part of it when it had returned 1,000%. It's okay if you sell part of your stock when it returns 5, 6, 7, 10x, right? And let the rest ride. So bottom line is there is no magic here, okay? There is no fancy algorithms. There is no complex trading strategies. There is no get-rich-quick schemes. It's only about find companies with great products, with great moats, analyze their financials, and you see that the revenue is growing, the income is growing, the balance sheet is balanced, not too much debt. Buy that stocks. Buy aggressively, especially when it's on sale. You want to find that disconnect between the value of the company, okay, and the price of the stock. That's what Benjamin Graham will call the margin of safety, okay? You want to find those stocks that have great value, but they are selling at a discount. And then you just hold it. Just hold it for years. And this is how most successful stock investors make money, right? This is not about gambling, it's not about day trading, it's buying and hold good businesses. You are a business owner, not a gambler, okay? So if you are ready to be a successful investor, you should also check my Henrique Wealth Academy. I will leave the link in the description of the video. The most important investment you can do is actually the investment you do in yourself. So keep investing in yourself, keep reading, follow me, follow my courses, buy books, keep investing in yourself, in your knowledge, so that you don't need to follow the stock tips of YouTubers. You can instead have the tools in your toolbox so that you know when a stock is a good stock to invest or not. All right, if you find this video useful, give it a like and subscribe, and I'll see you soon.